And it's time now for our business update. I'm joined in the studio by Brian Quinn. Welcome. Brian, starting in Greece, where the country's parliament has just approved a new round of austerity measures.
Well, Greek lawmakers have approved both tax hikes and pension cuts in their latest vote. Their goal to convince the country's Eurozone lenders to release the next installment of Greece's current €86 billion bailout plan. The government is hoping the new measures convince creditors not just to release the money it needs to avoid default, but also to restructure that debt to make it more manageable. Martin Pollard reports.
Anti-austerity protesters clashed with police in Athens late Thursday night. But the austerity bill, which will mean nearly €5 billion in cuts over the next few years, still passed in Parliament by 153 votes to 128.
Nobody is denying, no one has any doubts that this agreement has difficulties. However, it does open a path in front of us. It is a decisive milestone in that we do not have another bailout review to complete. But instead, we finally have a comprehensive solution to look forward to.
Eurozone finance ministers will meet next Monday to discuss the Greek debt crisis. Greece's new austerity programme aims to persuade those EU-based lenders to provide a much-needed €7.5 billion bailout package. This would be part of an €86 billion loan package which began in 2015. In total, that's €260 billion in bailout money since 2010. But Greeks have grown tired of stringent austerity requirements put on these loans. This week, thousands have taken to the streets to show their anger.
They've taken everything from us, and these pseudo-leftists are finishing us off. The only thing we can do is resist and revolt.
This bailout program, after all the other ones, will mean our complete extermination.
The austerity bill follows news this week that Greece had fallen back into recession for the first time since 2012. In the first quarter of this year, it was the only Eurozone country not to record growth in its GDP.
And we've been talking about the corruption crisis wreaking havoc in Brazil this morning. Brian, what are the economic repercussions?
Well, two major ones so far. First, Brazil's currency, the real, has lost nearly 7% of its value against the dollar. The second, on the Sao Paulo Stock Exchange. It lost 10% of its value right away yesterday, triggering what's known as a circuit breaker to briefly suspend trading. Now, we've seen Michel Temer saying he will not resign, and that's leading analysts to worry that the crisis could bring the economy to a standstill. Let's take a listen here.
The stock exchange fell so drastically because this concerns President Temer and implies his possible resignation. If that happens, there's no chance reforms will go ahead in the short term. The markets are factoring in the cost of this negative scenario and uncertainty. I think the sustainability of market fluctuations will depend on President Temer's reaction to the scandal and also on new elections. It'll depend on whether he resigns or if the Federal Supreme Court declares the Rousseff-Temer election ticket invalid.
Brian, let's move on to the markets. How are they looking this morning?
Well, European markets opening higher after some overnight gains on Wall Street undid some of the damage that it suffered in its worst trading day of the year on Wednesday. London's FTSE 100 up over 0.25%, the CAC 40 here in Paris up around 0.2, and the Frankfurt DAX up around 0.1% there. Asian markets also following Wall Street and the crisis in Brazil. Japan's Nikkei index up nearly 0.2. The Shanghai Composite is in the red at negative 0.12. Hang Seng up 0.3, and the Kospi is up almost 0.1%. Well, let's take a look at some more of today's top business headlines. The clock is ticking on NAFTA. Donald Trump's administration has set mid-August as the start for new negotiations on the North American Free Trade Agreement with Canada and Mexico. Renegotiating the treaty was a pillar of Trump's campaign platform. He's promised to shrink trade deficits with the two partners. Singapore Airlines has announced its first quarterly loss in 5 years. The company blamed competition, cost pressure, and European antitrust fines for the loss of nearly $140 million. Analysts had predicted over $50 million in profit for the period. Shares in the airline dropped over 6% on the news. That's the largest fall since 2008. And 4 global automakers have agreed to pay over $500 million to settle claims from car owners after an airbag recall. Toyota, Subaru, Mazda, and BMW will compensate owners of nearly 16 million cars after a recall of Takata brand airbags. Takata has already agreed to $1 billion in civil penalties over the faulty equipment.
And finally for business, a new record for an American art auction.
Well, the world of fine art collecting has become more and more financially rarefied in recent years, and the most recent auction at Sotheby's in New York shows no sign of reversing that trend. An untitled work by New York painter Jean-Michel Basquiat has just sold for $110.5 million, a new record both for the artist who died in 1988 and for an American painter at auction. A Japanese entrepreneur and art collector placed the winning bid. He says he's going to loan the work to museums and exhibitions around the world. The previous record for a Basquiat was just over $57 million, also by the same collector.
An expensive but invaluable piece of work. Thank you for the latest business news, Brian.